let's have a look at technical analysis. So that's the IPO in 1993. I just created. So open price was 330. During that month, it was fluctuating from 280 to 373. Okay, so if you bought it at that moment, okay, and kept it until now, so their earnings right now is 265. Okay, they're paying dividends $1 that this year. So I presume if you put $3,000 at that stage, you would be getting $1,000 in dividends only right now. So which is fantastic, right? Return on investment on a long-term company. It's only dividends, but also your shares would be at a price of from $3,000 to $40,000. If it was $30,000, it would be $400,000. Okay, and we can see that's the drop which happened in May. Okay, and we could see another drop which was happening here. Okay, so that's in the long term, but in general, it's growing company. So that's from 2009. Now that's what we can see. What do you think is happening here? Overbought, oversold situation? Yeah, way oversold. Interesting enough, if we try to find similar situation in the past, that all three indicators located like that, so it's only one time in 2009. That's when it was oversold like that. And after that, it has huge growth from $5, right? So all the way up. Okay, at least from $5 first to 20, 400%, right, within 1 year. Even more, like if you go from 2000 here, so it's more from $5 to $30 within a year. Okay, and then we could see red zone here in 2011. Also after that, the growth, and then in 16, right? And after that, we can see growth as well. So now it's even lower than before. All the rest, MACD wasn't there. So maybe two indicators were in place. After that, also growth. Here, growth. Here, like we already looked at this, also growth. Okay, so at the moment, based on technicals and the weekly chart, definitely very good position to enter. Let's have a look at daily. What will you tell on daily? The trend, you can see that the top line, like resistance level, it was holding, but the support level, look at this, it start kind of going like that. You see, it's not going straight down. So it's kind of curved, narrows down, and it's actually a very good situation like that, because after that you can see growth up like that. So it's kind of holding the bottom. It doesn't let the stock goes lower and lower. Okay, that's the thing. And what I wanted to show you, look at this. This is level, and this is level. It's holding it. So it's broke through this trend line 3 days ago. Okay, and at the moment it's testing. So at the moment it's very tricky situation, because we need to see what is going to happen. So there are a few things which might happen, because majority of people are still trading that stock. Okay. Also, we know there are certain uncertainties related to the reports because of this tornado and bad weather in Florida, right, in Texas. So very, very possible. Okay, if it returns to the same trend, it might continue this trend. Based on technicals, on fundamentals, we already know it's way undervalued, right? But based on technicals, because there are a lot of traders who can push this even lower, right? So we can expect that it might go even lower down. Okay, that's one way. So if we see some bad stuff and if it goes back to this level, so we might see that it turns back. Now, another thing which you have to keep an eye, it's this level. So if it holds this level, it's about $38, $38.50, I think. And so if it starts like that, so it might go parallel trend, and after that start growing. If it holds and breaks through, so we can see that growth because it's undervalued company, it might grow pretty fast. Okay, so that's why it's very important with the next like week or 2 weeks, keep an eye on this company, because if you enter this position, you might catch a really good entry point and make a lot of money on this particular company. Okay, so of course it's based on your trend and situation in your trading strategy. Okay, so guys, is it clear about this particular situation? Where would you enter? What would you do? Well, very good, Dor. Yeah, so it's always good to break it into two positions. Very good, Jonas. Absolutely fantastic. So that's another point, because we expect that indexes might go down, and if indexes will go down, when indexes go down, so we can expect that the share price might go down too. So all of this we have to take into consideration together. Very good, Jonas. Absolutely. So definitely we keep an eye on that. What is going to happen within next week, and then probably we'll enter a position and see when it goes. Very possible. It might not go at all. It might go against it. Okay. Because what happens? Remember, guys, that big players on the market, what they do, they think like I'm telling you now. Okay, they think in the same way. When the market start going down and everyone is selling, they using this situation in order to buy stock. Because at this moment there is big volume and they will be able to buy it without increasing the price. And quite often you see great stock which was undervalued, and the market is going down, but that stock is flat. It's not going down and it's not going up, because they buy it exactly, they buy all the volume which on that level. So they're not going to push the price up, but they're not going to like keep the stock vacant on the market. So they buy whatever they can buy at this particular price. For example, did you see what happened with Signet? We analyzed the Signet a couple months ago. Did you see that? It was at $52. I talked to somebody and the person was panicking and saying, oh my goodness, Signet so low, why it happened, and etc., etc. But when we analyzed the problem, which was within the company, we realized that Signet didn't really have like anything like bad which can affect the business in the long term. And look what happened. Company within a month went from $52 or whatever, $50, and now it's nearly 70. It's reached nearly 70. So it's 40% growth within a month. That can happen with any company which we analyze them, and Cake is one of them, because it's undervalued and it could start going up again. So believe me, all the people will jump on the board again and start buying it and pushing it up. Possible strategies: long-term buy and hold strategy. Buy 38, $40 somewhere on those ranges and hold it until 63.77. So it's a whole period range or above if you want to. Right? Possible waiting period up to 2 years. Okay, because indexes are high, and I expect that it's going to slow down a bit. It's not going to grow like that. It's crazy all the time, but still it might generate 100% profit plus dividends if you enter around these positions. Okay, roll strategy: if you're more active on the market, if you buy and sell using technical analysis. Rolls are small here at the moment, around $1 on a roll, so it's 2.5% of profit on a roll, and but rolls might last only a week, so it's pretty quickly you can make this 2.5%. So buy and sell. Sometimes it's you buy it, it grows within a couple of days and then flat on high, and then drops, and then flat couple of days on the bottom, so you can buy it there, and then so it's like that, you know. So but be careful, because it's still downtrend right now. Okay, so really careful on trading that. Now then, if you do buy in rent strategy, so you buy shares and sell cover call, and at the moment I looked at this, if you do it for next month, it would be about 2.1% profit, and 2 months it's 3.7%. Why I did here 2 months, because I wanted to show you that it's practically doubling. Very often what you see is that if you do it 2 months, it's actually 30% extra only, and here nearly double. For those who can be active on the market, job-related things, too busy, or maybe a very small amount of money, and brokerage commission is high, so sometimes it makes sense to do one trade for longer period and pay commission only once, rather than to do 2 trades and pay commission twice. Okay, so something like that. And then we can sell naked puts, and also look at this. 1 month it's 2.2, and 2 months it's 4.2% of profit. And again, remember guys, before you place any trade, you have to fully understand all possible outcomes of it. And because regardless what you're choosing, you have to know both outcomes, what you're going to do if it goes to your direction, which you expect, and also you need to know what you're going to do if it goes against you. Okay, what's your actions? How you're going to exit position, wait, buy more, leverage it, whatever, average it. So you need to know what you're going to do. Okay, so let's have a look at BR strategy for Kate. So that's the screenshot. You can see several strike prices. So strike price is not that great. So the difference is like gap between them $5. Spread also quite big, 145, 160. Maybe I've done it before our masterclass. So if you go maybe tonight in the market when it opens, maybe it narrows down. It would be a bit smaller, but at the moment it's 50 cents, so quite a lot. Okay, and what I've done, so it means that current price, last price was $40.55, and I'm agreeing to sell it at $40. So I'm selling it 55 cents below the price I paid, and I'm getting $1.45. So how much really I'm making money? Who can calculate it straight away? 145 minus 55, 90 cents, correct. So 90 cents, that would be your profit time value. That's what you're making. Okay, and that's each exercise, that's what you're getting, 2.1% on that. And if the share price goes below that, your break-even point is $39.11. So if it goes below 39, you're going to have a capital loss. If it's anything above $39.11, you're in profit. Even the share price dropped down. Okay, because you collected this 145. Now, if you decide to go for 2 months, you get $2.10. Also, minus 55 cents, which you're losing on the trade itself. So it gives you what? $1.55 profit, which is 3.71% in profits, or annualized 22%. So you can see that it's not a big difference here, 25 and 22%. Why do you think, guys, it happens? I already mentioned that. Why do you think it's like double, nearly double for the second month as well? Usually it's only 30% if you sell it for 2 months. Yeah, correct, Dory. So earnings coming up. Earning call. That's true. So that's the reason for that. So with calls, is all clear, guys? Perfect. Okay. And then naked put options. So what do we do here? So again, same table, but look at the right. So here you don't buy shares. So instead of buying shares, you sell put straight away. Look at this. You're getting 90 cents. Exactly the same amount which we were getting in time premium here when we deduct this 55 cents, right? Difference. So 90, same profit. Absolutely. But here we don't spend money. So we pay commission only once to the broker for selling puts. Okay. And that gives us about 26%, 2.2% profit on a monthly basis. But with the put, we're actually getting a bit more here, 1.7, not 155, 1.7, and that gives us 4% in profit. and it's 26 or 25% revenue on an annual basis. Okay, so that's 2 trades which you can do with put options. Now, is all clear about this strategy? Okay, cool. All right, so and leap call options for cake. I'm already looking at January 2019. Usually, I like, if I buy as long as possible in case something happens. And I didn't like really that much. First of all, low option, high, not low, high option premium. So it's nearly 10% I have to pay for the option, so it's high. Okay, spread between bid and ask quite high as well, 40 cents, right? And strike prices is $5, $5 difference in strike prices, and very low open interest. So it doesn't look like a good strategy for this particular company. Yeah, in any ways, it's high option premium, definitely not great because we are paying here. Spread between bid and ask quite big. Maybe it narrows down when the market opens, but because open interest is so low, I don't expect really that. Okay, that is going to happen like that. And $5 between strike prices, not also good. Okay, so that's about it. Do you have any questions on that? Okay.